All right. First question off the ranks coming from me is, we were talking last week about the number of transactions, sales transactions that occurred last year. And Greg, I had a couple of questions, follow-on questions from that I saw from people we didn't get to. So perhaps for those that are new on the call today, if you can just remind them, what we sort of saw last year, and how's that translating into listings right now as well?
Yeah, I think a very important thing was we saw that actually in Melbourne, there was just after lockdown, we had a 43% reduction in the sales because of the lockdown, but the year ended up with an 8% increase overall. So from 43% reduction in listings and sales to ending up in a positive state at the end of the year was a very, very big milestone. We've also just seen that there seems to be a lack of, when I say lack, there's fewer listings than what there are demand, and that seems to be putting upward pressure on price as well. So that's just pushing, slowly we're going to see it increases even because of lack of listings nationally.
Yeah, okay. So, I know Jack was talking last week about how sort of busy he's been these last couple of weeks, which typically, I know you guys tend to find you don't get a lot of interest from buyers and sellers until sort of after Australia Day weekend. Mm-hmm. But are you saying even with this renewed interest and early interest in the year, we're actually having less listings available for those buyers out there?
Absolutely. So it's, traditionally speaking, this time of year, as you're saying, with Australia Day, everybody goes to sleep, watches the cricket, does all their sort of stuff like that.
Let's not mention the cricket. We lost the cricket.
Yeah, I saw that yesterday, and I don't follow cricket, and I watched that, and I went, oh, hell, okay. Anyway, so that was, traditionally people are not doing anything this time of year, but there's definitely momentum in the market, but there's not the listings to support that momentum. Okay. So that would be putting upward pressure on properties.
All right. So just thinking back to my days of Year 7 economics, when we're talking supply and demand, we're obviously saying that we've got increased demand and less supply than we historically have had in terms of the number of listings nationally.
Yep. Well, I think you'll probably find that the listings are sort of following the traditional trend where they are lower this time of year, yet there's demand from people that wanting to buy that are usually asleep watching cricket, but are actually out there looking to buy, which is, that does result, supply and demand will push the prices up.
Got it. Okay. Yeah. All right. So I can see we've got quite a few questions here from people that are sort of asking about first home buyers and so forth. So I'm going to just, those of you that are asking these questions, I've seen them. I just want to sort of try and read through and put together some sensible questions to the guys. So before I jump into those, I did see last week we got some stats in terms of the amount of borrowings that had occurred last year and so forth. Has anyone got a bit of an overview on those stats? Like what did we see across the board in terms of total borrowings? Were they up, down, the same?
If I can answer that again, James, I was just looking at the stats now, and it's reached a record. In November, we reached a record of 24 billion. So that's an absolute record in terms of new borrowings, and I think that's...
So Greg, that's including everyone that was needing to refinance as well last year during Corona.
New loans.
So you're saying a $24 billion worth of borrowing for new loans?
New loans, not refinancing. So residential properties reached 24 billion, which that was in November, and that's essentially a 5.5% increase from October. So it's consistently increasing. And if you look at when they break that down.
So Greg, just before you jump in that, just simple maths for me, 24 billion in new borrowings.
Yes.
Australia's population, call it 24 mil. Yeah. That's
huge.
A huge amount of money. I was going to use some profanities, but I thought I better not in case we've got any younger people on the call today. Yeah. But that's a hell of a lot of money that's been borrowed over the last
and that's all new. That's all new loans. So not refinancing, all new stuff. And when you look at the breakdown of that, just over 18 billion is first homeowners. So it's I think with all the different incentives, both state and federal government are offering, people are jumping on board, specifically first homeowners, and it's gone, as you say, it's pretty high. What's in terms of borrowing, just getting in there now while interest rates are low, while immigration and things are locals are really getting stuck in and buying property.
Okay.
Yeah.
All right. Well, that's interesting here. I've got a question here from Craig, who's just sort of talking about, seems to be a bit of a follow-on, perhaps, from what Greg said. Are first home buyers, more active, or have they been more active than the past? I know, Jack, we were talking about this earlier. Is there, are we seeing more? Is there any reasons why, if we are seeing more?
Yes, and we definitely had a lot more inquiry came from the first home buyer, especially like the young people, the age between like 20 to 30. The figures that Greg mentioned, and they contribute a lot of the the borrower this year. And so far, I think the reasons being, the factor is, of course, the interest rate is so good. Everybody thinking, okay, it's time to enter into the market, especially for the new buyer, for the first home owner, for the young people. Eventually, they're gonna buy their own property. Now is good timing for them to enter into the market. They have they cost them less money on the interest rate. Why not? And the second of all, last year, so during the lockdown, I think we mentioned that topic before, like the Australians has a lot more saving than normal because they can't traveling, they can't spending money on other things. So those money all goes into the deposit. So I think that's the major reasons for the first home buyer. They jump on board, say, okay, I'm ready to buy now. Everything is ready.
I wish I was a first home buyer. I think I've got less savings than I had before, because my wife has spent everything we might ordinarily spend on holidays on online shopping. So perhaps if I could go back in time and become a first home buyer, my bank account might be looking a lot more healthy.
Yeah.
Okay, that's interesting. So I've got a comment here from Jonathan that said the man in the top right's got very thick hair. So I'm sure he's talking about me. So thank you, Jonathan. I will do a shout out again if you want to say any comments. Anyone else's hair? I can see Lucas getting excited thinking it was him. On my screen, I'm the top right, so I feel good about that. Okay, so just with that theme as well, sort of first home buyers, can anyone sort of give us a bit of a summary, sort of where the market is at the moment? Are we seeing prices, are they predicted to go up, down, sideways? Lucas, any thoughts on that?
Yeah, look, obviously, with all the current incentives and like Gregory mentioned, with the amount of borrowings that are happening, and Jack mentioned with the market increase, we are the house property market has tipped to increase by 10 to 15% in 2021. So that's a very, very healthy and big increase, and it sort of generates some other conversations and topics that it's currently very hot online, and one of them is superannuation. Of course, as we all know, there's billions and billions of dollars in super.
So sorry, Lucas, just with that, so would it be fair to say, it's potentially, if we're seeing some strong growth, and I know we talk a lot about interest rates being low and so forth, but potentially now it may be more affordable with the combination of the incentives, what Jack talked about, with people saving more for those first home buyers to get in today, but you're thinking that's not going to last for long.
Exactly, because as we said before, you've got the supply and demand, you've got the competition amongst all the buyers, and everybody all of a sudden has got cash. Everybody's sort of fighting to get what they want, to start your dream. So basically, then it sort of creates other topics. And one of them is, like I said, with super, with billions of dollars sitting there that nobody can touch. So there's a lot of question marks. Are we using super to the best of our advantage? Because, now housing is still affordable. Interest rates are low. So now perhaps it's a time maybe that we can go and borrow and make that dream a reality. Because if we sit and wait, property prices are tipped to increase 10 to 15% this year. There was an article this morning, the banks announced within the next 2 to 3 years, we're going to have a 30% increase. That's a third more than what it is today. So,
the hot topic that used to always be around a couple of years ago about, it's unaffordable for young people, first home buyers to get in. At the moment, Greg sort of told us that based on borrowings, it's all first home buyers that have been buying up big. We've been doing more transactions. So that affordability is not a hot topic today, but potentially it's going to come back in tomorrow. And I know you love super. I saw the other day you did a couple of deals to people buying property in their super fund. So you're not talking about people buying a home in their super fund. You're sort of saying that there's other ways to perhaps use that so they don't get to retirement being a lifetime renter, is it?
Exactly. So one of the thoughts is, if there was some sort of a way you could take, let's say, $100,000 out of your super savings and put it into like an offset account, so to speak, or an account that serves as the same as an offset account, therefore reducing your repayments, so you can afford to get into the property. But don't forget, it's not just the first home buyers, because everybody's talking about the first home buyers. But also there's a lot of investors that are coming out now with a 50% stamp duty savings, which, we haven't had ever since stamp duty was introduced to investors as well. So we've seen a lot of investors coming into the market strongly now as well.
Okay. Perhaps for some of those people on the call that haven't heard of an offset account before, can you just give a quick 30-second overview?
Yeah,
what is an offset account and how does it work?
Well, it's basically the same as a savings account, and it's linked to your home loan. So what happens if you've got a home loan of $400,000 and you've got $100,000 of savings sitting in the offset account, that the bank counts that as off your loan. So you only pay interest on the remainder amount. So if you're 400, you got 100 sitting there, you only pay interest on 300. So you're saving, and that money is available to you whenever you want and no questions asked. You can put as much as you want or take as much as you want out.
Okay, so that's a really interesting concept. You're sort of saying potentially, one of the thought bubbles is that maybe we could better make things perhaps affordable for some of the younger generation of people looking to get into their first home, to be able to access and use some of that money they've got in their super to help them make a home loan more affordable.
Correct.
Yep. Love it. Maybe I can give that to my wife for her online shopping. See if it makes that a bit cheaper. Okay, so what perhaps for everyone on the call, has anyone got any thoughts on a few key tips that might help first home buyers get into their first home, or those that are trying to work out how to actually get their deposit together and so forth? Anyone got a few good tips they can give to those on the call?
I think I have the few tips, but I think I just sharing the top 3 tips for everybody. And the tips number 1 is find a way to get your deposit ready as fast as you can. So perhaps, for example, you can have a bank account. This is only for your deposit. Whenever you got $5, $10, $15 extra money, put into that account. Give you like the budget, say, okay, this month I'm going to put in 500,000, 1,500 into this account. So stick on that, and you might sort, and after 1 or 2 years, or you got your deposit ready. So which is the fit for faster way to get a deposit ready. And the tip number 2, I think, is work out your budget. Your borrow capacity by speak to your mortgage broker or your banker. Say, okay, this is my financial situation, how much I can borrow. So you can clearly understand what is your affordability, how much you can spend on your first home. I think the top tip number 3 is doing some research. By knowing your borrow capacity, how much you can borrow, then now you can search online, say, okay, this is the area I'm looking to buy, and what kind of your property. This is the things I must have on my first home. So this kind of you narrow your target of the property you're gonna buy. So I think by doing those 3 tips, you will get a much more easier or quicker to get your, the first home. But because it's a new year, so I'm gonna give you the bonus tips.
Oh, the bonus tip. All right, everyone listening on the line.
I think
bonus
this,
tip.
yeah, the bonus tips will be, I think it's all the first home buyer, not even for the first home buyer, everybody should have, which is speak to the expert, the real estate agency, and the local agent, the familiar with the market, by using the knowledge and experience from them, so you can have a shortcut to get an understanding of the market and what is going on, how is the processing of buying your first property, save you a lot of time, energy, and even money. But here, I'm talking about the real expert like us. And
the number is 0409 10090.
Yeah. I could see that coming from a mile away. I saw everyone getting ready to jump in and say, "Here's my number." I saw Greg looking around for a pen. He was going to quickly hold up a sign or something. All right. So just recapping that, you're saying, Jack, first one is try and save that deposit ASAP.
Yes.
Find a way to put aside every dollar that you can.
Yes.
Second one is work out your borrowing capacity.
Yes.
And the third one is to
do some research and understanding. Yeah. What do you looking?
And I assume what you mean by that is that, I spend my weekends, I go to Toorak and I look at these big mansions. I go to Doncaster, look at acreage there that I can never afford. You're saying cut through that, find out what it is you need, and just focus your time on that.
Yes. Exactly.
And the bonus tip is call me. Don't call the other 3 people. I'll help you.
Call me.
Okay, great. All right, look, it's just sort of hit the top of the hour, so I will just stop the questions there. I think we've done pretty well to get through most people's questions. Those of you that have still got something you want to ask us, I'm just going to wrap up a couple of minutes now, and then everyone will hang around and we can answer any questions that you guys have still got to go.